Good morning, everyone. This is Manoj M, and in this video, this is 4:20 in the morning on the 12th of Feb. Looking at what happened yesterday and the action that we saw, um, it actually triggered an instinct in me to check what's happening in the markets and what are we heading for. Now, the best way to assess what's heading is to go to each sectoral chart, and see what's happening. Because if you see everything, see the entire market in its entirety, but break it down into sectors, you understand what's happening in the market. Because if the majority of the sectors show you that they're breaking down, that will lead us to believe that yes, we are in for some more, downward action. So in that effort, I decided to take this, actually, I decided to analyze all the charts, and this is what I'm going to share with you today. I'm going to look at the weekly charts on all these sectors that matter on the Nifty, and we're going to go through them one by one and see what's happening and what are they showing to us as to what is the target that we can see on the downside. With that in mind, we start with the realty sector. Now, the chronology of how I'm going to take this is I have broken down the sectors into what was the fall that they saw yesterday. And the ones that saw the maximum fall are the ones that are appearing to you in that order. So the one that saw the maximum fall was the realty index, and that's where we start our journey from. So somewhere down the line, somewhere in my analysis previously, at 9:30, I'd said that we should expect 808, but we saw a sharp bounce with this green candle somewhere in the week, just the last week of Jan. And that took us back to the top. And again, we are falling down from there. And this time, I think 808 is the next target. Going further down, I think we can also scratch ourselves to go lower. And we could also tag this level, which is the 775 level. So we could end up going down to 775. Now, this is the first sector that I'm analyzing. I'll go sector by sector, trying to make the video as short as possible. But since we're going to cover 10, 15 sectors, this is going to be long. But this is very essential to track, because this will give us the vision as to what are we seeing in the next 2-3 months. The next sector that I'm looking at is the mid cap, CNX mid cap, if you see here. And we have consistently fallen. Our initial assessment was that we'll fall from 54,718 and go down to 48,576. We did fall midway. We took a sharp turn back up, but exactly where near the fall began, we fell, we fell badly, and we are now back looking at this level of 48,576. So whatever action we saw in the last 2 weeks was just a little pullback back into the higher areas of this range, and then now we've fallen back down. Now, the important thing to look at is what's going to happen today. If we happen to close this week above this level of 50,919, there could be some semblance of some kind of a reversal in the markets. But if we stay below 59,119 in this week, we're surely looking at 48,576 and then 45,388 in the coming time. Let's look at the next one, and this is the media. Media, yes, again, the media has been bad. This is our initial suggestion as to what's going to happen. We took a sweep of these highs, we fell lower. We swept and we tried to go higher, but then again, we were rejected at this level, and we are now coming lower again. And looking at what we have on the left, there is nothing much to see. So the media is looking really weak, and 1633 to 1405. We are currently at 1534. That's about 10% more to go in the media for this particular fall. Yes, looking bad again. Let's look at PSEs. The PSEs is looking really, really, really troublesome. And I see a big fall. So the last time we predicted the fall from 9902 right up to 9012, it came through. And now once we've broken 9012, we are tagging the lows, these lows of this low. Once we break this, there is a potential to fall as far as 577. So this looks like one of the weakest sectors that I see in the market. And you know, scenarios like these are really, really scary. I'm expecting this fall to come to sub 6,000 levels in my mind. This could take about 2 to 3 months. But yes, we should be staring lower on the PSE sector. Let's look at autos. The auto sector has been weak for a long time. It was a little sideways for the moment, but in the last 2 weeks, we took a little bit of a pullback, but that pullback was not enough. And we have now shown yesterday that we've fallen again. And the first target that we see is this particular level here. This will be your first target. And then I think we'll go down to 21,158 and then lower to sub 20,000. So sub 20,000 is coming on the Nifty Auto 2. That's what I think I see on my charts on the longer term weekly analysis. This is the energy sector. Look what we're seeing here. We predicted right then that 37,000 is going to be a difficult level. And once we break that, we are going to go down to 27,800 odd. And we are on that trajectory. The last 2 weeks have been sideways. But again, this week is showing us some breakdown. Now, there are some fair value gaps and some support here, but I don't see those holding because we are past that, we are past that level and we are heading down. So how I assess my move is that if this is the move that has taken us higher, and if we are below the 50% level of that move, that tells me that we are looking at the bottom of that structure. So this is going to be your final target. In fact, this should be my final target here. And I would like to stretch this line further, and sub 26,000 is what we're looking at on this sector. Now, this can take about 2-3 months to get there. So don't get me wrong. This is a vision that's going to be somewhere in the middle of beginning, somewhere in the middle. So it could be April, May before we see these levels. So this is a long-term view of what we're seeing on the sector. And, you got to understand, if you only have the long-term vision, you know what's going to happen. You put your trades in action based on what you feel is going to happen in the next 3 months. This is the FMCG. Looks strong until the action in the last 2 weeks. We've fallen, and this week has been really bad. We've come down to this level 53,684 with some kind of a support, but I see this breaking down this time because the ferocity of the fall is so high that we're seeing that this looks like it's going to crumble down. I don't see a lot of support in this area on my chart, and 50,518 is the first call that we're going to get. This could happen in about a week or two, in fact 3 max, and then we could see that 50,518, which is a fall of roughly 8, 9, 10% on the FMCG index, which is huge because when this converts into falls for the specific stocks in this sector, the falls are larger. When you talk about individual stocks, the sector will not fall in that big number, but the resultant fall in the stocks is going to be larger. Be careful with your FMCG holdings. Let's go to the next one, which is the consumption basket, which should be helped with what happened in the budget. But in line with everything that's happening, I see this falling below, and my renewed target has moved lower to 10,013. The last assessment, I was hoping that we will fall, but we took a good reversal, went back up. But then again, this didn't turn out to be a reversal we could manage to gain higher ground with, and we've fallen back again into that zone. And now we're looking at 10,000. That's a 10% fall in this sector too. Let's look at CNX Pharma, which has a lot of prospects in my mind in the falling market. But what's happening? We took a little bit of a pullback, went into higher ground, but again have fallen down. and now we are tracking back into the range from 21 sub 21,500, which could take us to 19,377, which is a good support to look at on the weekly. This was the last breakout point somewhere, what we achieved in the month of June, and we could be tracking back to that level now. Because again, if you see the move, where are we? If you see the move from here to the top, we are just about at the 50% level. We tried to bounce from that 50% level, but we could not bounce from that 50% level, and then we are now tracking back down. So since we did not take that cue and could not sustain these levels above the 50% levels on the Fibonacci, I think we might be facing another round of selling, which would first take us down to about 19,377. Don't want to sound alarmist, but this is our next target down there. So we might be heading for 17,930 on this chart too. Let's go to the next one. This is the CNX MNC. Again, MNCs are withdrawing money every day. And yeah, we've fallen. So the first target that I placed somewhere in the month of November have been reached. We actually reached them in the end of June, Jan actually. We went up at that point because our targets were met. We went up further up. Now again we're breaking down, and our next targets now are going to be 24,256. So that's another 10% down on the CNX MNCs, that is the multinational corporations. We're looking at some rough period ahead. We need to break this particular green area, which is a support. But given the action that we're seeing, if we don't end up higher, about 26,300 in the coming days, 24,256 is coming. It looks ominous, and I think we are going to get there, because the first time we got the support, that support hasn't taken us any way higher, and we've come back to test that level again. So that means that whoever was buying here has not been able to push the market higher, and we are coming back to revisit that level. We might see one or two more bounces, and then we may fall, because the MNCs are quality companies, but still, I feel we're going to break down. Let's go to the next one. Let's look at CNX Infra. This is something that again is looking really bad to me. And we have already met the first targets. Nearly there. The first target, this was given by me in November end, and we've nearly met them at the end of Jan. And again in Feb, we're nearly there, and we're looking to go deeper from here. Last week's action has been really weak. It's starting a new cycle of falls, and this could take us down. So if we don't take any good support at, let's say, I'm going to review my target once again to 7,900. If we don't see a bounce from 7,900, which we can, but I think we won't get it, because we've already seen a lot of support here, but all those supports, whatever people who wanted to buy there, have not been able to hold the market higher, and we've fallen again yesterday. We might break this and go below 7,900, which will take us to 6,300 or under 6,400. That's a huge fall of more than 15% on this one. So CNX Infra is looking bad. You need to look at the stocks in this segment to decide which are the ones that are weak, and then if you want to ride the downside, you need to take those shorts on those stocks. Let's look at the metals, which is an important index to look at, in line with what is happening in the US and the Trump tariffs. The metals gave us a good bounce last week on the news that the tariffs may be held back, but finally the tariffs have come in place. Not that India is exporting a lot of metals to the US, but it goes against the general sentiment in the sector. And what we're seeing is that we've already taken the dip. This is going to be the pivot point. Anything above 8,200, and we could survive the fall. But below 8,200, we're looking at 7,500, which is again a 10% fall on the index, on the metal index. Let's look at commodities. Well, again, commodities, the first targets have been met. In November, we placed our target 7890. We consistently took some support at these levels. We tried to move higher. But if you see these three blue green candles, every time we tried to push higher, we were not able to sustain. And now what is happening is this red candle has again broken down. All that effort of the last 4 weeks is going down the drain, and we are now looking again to cross below that important level, and we could be heading to these two levels of 7,300 where where we see some support, but eventually I see under 6,600 levels coming, 6,700 levels coming. So that's another 20% fall on this particular in commodities, which is quite sharp. And this can have a very bad effect. There's a lot of metal stocks, commodity stocks in our in our markets, and if they see a fall of 20%, you can imagine what's going to happen to these stocks, individual stocks in that sector. Be very careful with your commodity stocks. CNX IT. Now, this is something which should have been doing well because the dollar is down, and that says that the revenues are going to come larger in number. But I don't see, I was very bullish on this sector, but the last few weeks and action in the last few weeks have, created some doubts in my mind. And the first level I think that we're going to tag below is going to be 40,000 from the 41,900. That's a 5% fall. And then we could eventually go down to 38,519. Solidarity with everything that's happening in the markets. And the rising dollar is going to support this index, but there are a lot of other headwinds with the Trump tariff design and everything that Trump is talking about, the outsourcing and the problems with the H-1B visas for Indians trying to operate in the US market. This sector is also going to be in trouble. And AI is obviously going to create some kind of impact on the outsourcing. Work of 20 back office people is now being done by one AI tool. So I see a lot of threat to this industry from India. Now, we may be doing better because we may have more people working on AI, and on the positive side, there could be more use cases that will come out with AI, and with the kind of talent pool that we have in India, we could do better. But in the short term, for the next 2 months, a lot of upheaval with the Trump organization taking, these chaotic moves in the US. This could hurt the sector because all that is happening with Trump's action is causing uncertainty in the market, and uncertainty is not good for the stock markets, and that will only lead to people losing confidence in what's happening. And I see a lot of people exiting their positions, and we may see a fall in this index too, which I thought was the bellwether, which could have been the one that would not have gone down. Nifty banks is a relatively better sector amongst everything else that we see. And if you see in the last 2 weeks, last week, we've not seen much of a fall. So banks are the ones that are holding the market at the moment. And if banks do well, we will see a gradual fall. If the banks give away, there would have been a huge fall, but the banks are holding on to the market. But if you see in November, we predicted the fall to 23,265. We came nearly there. And in this last week of Jan, we took a bounce after the Trump inauguration. And all that euphoria is dying down now. And Trump is creating all that chaos that he is. And it's again coming down. You're seeing last week's candle, we've taken a decisive sweep of the top of the sector. Let us see what is in store here. So the top of the sector actually was here with this sharp fall, but we have swept these. We've taken some resistance at this fair value gap. We're looking lower levels. The first target is going to be this level, which is 24,148, and then we go below 24,000, and we could track down to 23,000, 23,400 levels, and then to 23,600. That's Nifty Bank for you. Nifty, let's see Nifty. Yeah, Nifty, we'd already made some suggestions on Nifty, and we thought that if Nifty could sustain this level of 23,800, 900, then we would go higher and touch 24,987. There was an arrow that was there on my chart before, but I very reluctantly removed it because I didn't see that happening after this reversal. And now we're seeing this downward spiral. Let's go to the daily and see what's happening. And yeah, I'm looking at some really nasty falls. This is an intraday chart that I'm looking at, and I see this fall coming to 22. There is some kind of a support at this level. There is a gap, but this gap has been supported 1, 2, 3, 4, 5 times already. And this will definitely on the daily, on the 2 hourly, sorry. And on the daily, I see that there is some support here, but I don't think that's going to last. And we are going to track the bottom of this level, which is 22,818 surely. And if you go to the weekly, my levels go down to 21,827 and lower. That's what I feel. This is the 4 June candle, which was the election candle, and we are tracking down towards spiraling down towards the low of that candle, which was the 21,200 odd level, which is where we are heading to in my mind. So we are going lower on this one. I think we have some tough times ahead for us. Given all the sectors are saying, Nifty is not going to stand up if all the sectors are not going to be with it. Bank Nifty, again, showed some promise for us in the last 2 weeks, but is now beginning to fall down again, retracting some of it. And we have swept the highs of the first week of February already. And that is very ominous for us. The first target is going to be 47,808. This is the Nifty spot index. 47,808 could be the first target, and 46,000 odd could be our final target, somewhere that what we see in the month of April, May, March, whatever. How ferocious the fall can be is not something that we can gauge. But yeah, this could happen in March, this could happen in April, and we could be visiting these levels very quickly. So these were the charts. We've recovered 3 to 5, 10, about 16 charts that we've covered in the short span of time. And we've tried to assess and give you a picture as to what's happening. Now it is for you to assess where the market is going. I'm telling you what my charts tell me, and there's a breakdown that's coming. So it makes no sense to invest for the long term at this point of time. We need to look at long-term investments only beyond another 10% fall. So I would put my ballpark assessment at 21,000 is when we should be looking to, start nibbling for our longs and for the long term. We're still not in an area where we should start nibbling. I may have made some suggestions that we could start to nibble, but after my November assessment and what I see this week, I've begun to feel that we are going to start another way down, because the the lower high, lower low, lower high, lower low sequence is now beginning to give me shape. And when that happens, that clearly tells us that there is a downward trend which will take us lower. That's my assessment. And you should be consulting your own financial advisor to corroborate what I've given to you as a feeler. Don't take this as a definitive. This is an analysis that can go wrong, because we work on probabilities, and one good news can change things for the market. So this is something that the charts tell me, but it's prone to changes because things happen which change the way the outcome can look at. The outcome can happen. But this is my analysis, and I feel that we should be aware of what are the worst come possibilities and track our portfolios in that manner. That's it for this video. I hope you are not alarmed, but you know what's in store and take steps to be aware of what can happen, and use risk management and mitigate whatever risk that you have with whatever you want to do. You want to get out of the market, you want to step out. There are a lot of things that you can do. You should consult your financial advisor in these moments and take hold and take concrete decisions about what you're doing with your holdings, because just letting them sink is not helping you. probably it would be a good advice to, go consult your guy if you've not done it, because we are at the cusp of another fall. We were midway through the fall. So if I just were to give you a brief assessment on the Nifty Bank, look at where we were. This was the June fall. We tracked higher, and we have now fallen below that 50% level, which is supposed to be the threshold. Now, what happens is, if there is an uptrend, what happens is the market tend to reverse from the 60-61% level. Now, we've already done that actually, but we're seeing that fall come back in. So if you use that 50% level as a resistance point, because it was supposed to be support, but got broken, we tried to go back up, and now this is acting as a resistance. So the 50% point is acting as a resistance. And if we are tracking down, then we are going to go to the 0 point, is what the charts tell you. Let's look at Nifty and see if that is the case with the Nifty also. Let's look at the 50% point from the top to the bottom, and you will see the same action. We tried to rise out with that 61%, 61% odd levels, but we tried to track higher, and we are beginning to fall again. So that 50% resistance point is an important level. And if we don't hold that, and that support becomes resistance, it should track us down back to 0, which is where 21,264 comes, and which is where I think we're headed to. Guys, I'm right in my pajamas right now, but I felt this analysis was important to do. And the early morning is the best part to, be calm and decide to do this analysis. So I spent about half an hour on the charts and analyzed my positions, put them on annotations, and then I decided to bring this video to you because I concluded that we could be heading lower, and it could help people if they knew what's coming and they could tune their expectations from the market based on what they see from the charts. That's it for this video. Don't be alarmed. This is a normal course in the market to fall, and it's a learning to navigate this. Once you learn how to navigate this, the markets are going nowhere, and we are going to rise back again. Everything that falls has to go up. So you will have another opportunity, but you need to know what and when and at what level the opportunity exists. And if you can know that, you can, save a lot of months. So let me give you an example. If you're going to fall to the levels that I'm telling you, and if you exit now and you'll begin to enter at that level of 21,000, you will have not only, saved these 2-3 months of fall, because this gap of 10% is going to be easier for you to fill back up when when the market decides to go up again. So that's it for this video. Thank you. Do subscribe to my channel and do like this video if you think you get some insight from this video. And thanks a lot. Look forward to seeing you again in the next one. Goodbye for now.